Did you know that Jim Cramer discussed the rationale behind Wall Street's continued optimism for Tesla stock a few days before the release of the third quarter's financial report? It should be mentioned that the second quarter's result beat Wall Street forecasts. Wall Street seems to still be optimistic about Tesla's shares. You surely wouldn't want to miss the information because it indicates that the margin will increase rather than decrease. Jim Cramer is the host of Mad Money on CNBC and the anchor of Squawk on the Street. He previously managed hedge funds. His enthusiasm for Tesla has been reaffirmed by a recent statement he made about the automaker. When Cramer was questioned which automaker he would want to purchase in a recent show with CNBC, the astonishment was obvious. It's crucial to remember that although Cramer has been a huge supporter of Tesla, he was also very positive on other automakers like Ford. The stock investor chose Tesla. Why did Tesla earn Cramer's preferred shares? But before that, welcome to Investor Facts, where you may learn about investing and how to make the best financial decisions for your life. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. According to Jim Cramer, the CEO of Ford didn't separate the EV division, including the fact that ICE vehicles produce golden money. Commenting on this, Jim Cramer remarked that in 2026, he would choose Jim Farley, the CEO of Ford, above Elon Musk. Ford's statement that it will produce 2 million vehicles yearly, according to Cramer, wrecked Tesla's strategy, and the company goals are impressive. He also revealed funding to achieve an average operating margin of profit of 10% by 2026. Even though 64,000 of Ford's all-electric Mustang Mach-E crossovers were sold globally in 2021, the automaker reported an adjusted operating profit of 7.3%. The host of Crazy Money at the time advised Tesla shareholders to think about selling their shares rather than holding onto them for a long time, as most investors intend to do. But now, Jim Cramer has referred to Tesla as a sleeping giant, pointing out that Ford fell short of Wall Street's projection for its fourth quarter earnings. Jim Farley, the company's top executive, he stated that the business should have performed far better last year. Besides, the business has forfeited roughly $2 billion in profits that were within its hands. On the other side, Tesla reported fourth quarter earnings that were better than anticipated, and its CEO Elon Musk claimed that orders for January has been the strongest in the history of the automaker and had increased by over double the rate of Tesla's global production. Jim Cramer decided on Tesla over Ford and GM as a result. He also mentioned that Tesla no longer sells insider shares, and he thinks this is helpful to the automaker. Despite receiving a few price target reduction from analysts, Tesla shares have begun to soar, and Jim Cramer has said that at current price, Tesla may be immune to negative press. Other analysts also anticipate enormous possibilities for the automobile in foreseeable future, so this isn't only happening with Cramer. Contrary to popular belief, the economic reports did not fuel the rallies during the trading season, he said. The industry is an earnings season. Thus, equities are doing well because many of them generated strong figures, according to Cramer, who was speaking on the subject. He claimed that if you only pay attention to the Federal Reserve while on permanent negative autopilot, it can be quite perplexing. These actions will be much less shocking if you keep an eye on the individual corporations. According to Jim Cramer, the rise in Tesla stock can be attributed to a run of spectacular company earnings. The price of Tesla has been increasing as investors digested the most recent earnings report and revised gross domestic product figures, which showed that the U.S. economy increased by a quicker 2.9% in the fourth quarter. Companies and their CEOs, who should be competent enough to manage them, are what matter during the earning period, according to Jim Cramer. Tesla's price reduction are no longer breaking news, and Cramer claims that the business has the margins necessary to continue so. Since Tesla's stock is down so much, Jim Cramer said he does not intend to bet against the firm, and only a small number of people would want to do so. A lot of people are starting to increase their price targets for the stock. The struggles have been immense for Tesla and its investors as a sequence of events induced the stock to drop numerous times in the previous year. Despite the negative statement from analysts, and Tesla's share have increased many times this year after a somewhat more catastrophic year for the company stock. Tesla made available its fourth quarter numbers. Tesla data was still breaking records and indicating a solid start for the vehicle firm to make big earnings this year, despite some investors' claims to the contrary. Over a year, shares of Tesla dropped more than 12%. However, the stock is again beginning to rise, especially in light of recent price reductions in the US and China. According to Jim Cramer, the majority of high-quality tech brands that suffered last year as a result of the Fed's unstoppable rate hikes are those that pioneered the global shift towards digital transformation, upon which many different industries depend. He claims that in 2022, the greatest and most well-known equities on Wall Street such as Microsoft, Amazon, and Apple crashed and burned, and that practically all these events are really different versions of the same narrative. He continued by saying that these equities were reduced in half even though their businesses had not experienced such declines and that their stocks had advanced significantly before the Fed stopped providing easy credit. Without a doubt, the present recession has been difficult for automakers as many have found it difficult to maintain their sales and production levels. In March, Musk also issued a warning about substantial inflation pressure Tesla is seeing in its raw materials and logistics. Price reductions in China also appear to have followed Musk's statement that he detects signs of a market slowdown. There is, thus, no reason to be concerned at this time. Tesla has actually started earning even more and better sales this year and will have enormous demand and sales in the fourth quarter of 2022. The automaker intends to increase global production of its best-selling electric Model Y and Model 3 vehicles in the fourth quarter and to expand on its expansion in 2023, when newer plants in Austin and Berlin ramp up production. The automaker will be on track to meet Elon Musk's target for output in the upcoming quarter if Tesla's production prediction is met, according to Musk, and will move Tesla closer to the size of the German company BMW by the end of 2023. In a press release outlining the initiative, Tesla stated that the company would soon have its 2023 Investor Day, which would be broadcasted live from its Kicker factory in Texas. The automaker claims that its investors will have the opportunity to view its most sophisticated production facilities and have discussions with Tesla's leadership team on long-term expansion plans for the Generation 3 platform and other topics. The stock buyback scheme that Musk initially outlined in October may be discussed during the Investor Day along with other capital allocation topics. According to Brett Winton, CEO of Futuristic Arc Investment Management, Tesla would once again set the bar for the market if it's successful in producing its affordable EV, as it has done with its prior models. The Tesla team had openly mentioned innovation and how it may provide businesses with a significant competitive edge. Investors dump riskier tech companies in favor of safer bets as a result of ongoing inflation, uncontrolled interest rate hikes, COVID-19 lockdowns in China, and Russia's invasion of Ukraine. Jim Cramer gave his justification for selecting stocks in the future. He claims to think that if the Federal Reserve pauses its fiscal tightening, these battered tech equities might stage a stunning return. According to Cramer, whenever the Fed starts to budge, he'd much rather be in big tech, studying stocks that could make a huge recovery, or the better managed chip maker like AMD and Nvidia. Cramer also pointed out that many pure pandemic stocks may not be able to recover from their lows from prior years. Although Cramer continued to support Tesla as he did at the end of November, investors are still keeping a close eye on the company since selling pressure has increased over the past several months. Deliveries of Tesla vehicles are one indicator of company's financial performance. They shouldn't be used to predict quarterly financial results, which depends on several variables, along with the cost of sales, fluctuating in foreign exchange rates, and the proportion of leased vehicles. Now, what can you say about the success of Tesla shares in 2023? Thanks for watching. If you like this video, please subscribe to our channel. We're always posting new videos about finance, investing, and business tips that can help you grow your wealth.